So what's the best whole life insurance policy for infinite banking? Guess what? It's not quite easy to do, but I will tell you there is a secret. Here's how. So what is the best whole life policy for infinite banking? There's a lot of opinions out there. There's a lot of different people, but I'm here to tell you it's not as simple as just buying with the insurance company. It's not about the insurance company at all, although that helps a little bit. It's more than just that, and here's how it works. So this has been a big debate. I know a lot of people say, well, what is that best strategy for using for whole life? You know, for whole life insurance and infinite banking, what's the best kind of policy to use? You know, I'll tell you this, there are a lot of opinions out there. Because I remember when I first bought a policy, when the guy taught it to me, remember I was a financial advisor before. I used to say that whole life was horrible, it sucks, why would I ever use it? And then of course, all these real estate investors are bragging about doing this infinite banking thing and how it's the best thing since sliced bread, which I guess is pretty cool. But they thought it was great. And so I ended up buying it hook, line, and sinker. I drank the Kool-Aid. I bought the policy. I didn't understand why it was better, but I just did it because I figured I would learn along the way. Well, a couple years in, the recession hits. I don't have the cash flow to keep paying those expensive premiums I was doing, and I lost it. I paid 25 grand into those policies and lost the policy because I couldn't keep paying the premiums while I was going broke. Well, a few months later, I'm talking with a friend and find out there are better ways to design it. There are better things you could be doing with this policy, better ways to design the policy. It's not about the company per se, although the company does help, but it's about how you design it as the agent that makes all the difference. And I'm going to tell you, like, here's a basic secret of what goes with this. Now, here's the warning. There are a lot of infinite banking people out there, even here on YouTube, on Instagram and TikTok, and they might seem great. They might seem like they're great influencers, but I'll tell you, most of the time, they're just a bunch of BS that they're feeding you, right? Because the policy that guy sold me, there's people out there teaching that and saying it's amazing. And there's people with half a brain that say, nah, I'm running the numbers myself and it looks like crap. I can make more money in my business, more money in real estate. Why would I do this? And they're 100% correct because the policy isn't designed well. They were designed like the one I bought, which was an expensive piece of crap. By the way, I confronted that guy, told him like, hey, why did you do this? And he gave me all these different reasons. I shot them all down because guess what? I had an insurance license still. I could still defeat everything he came up with and still say, hey, I've got more money. What else you got? And he finally just said, Chris, I did it that way because that's how I make more money. I couldn't afford to cut my commissions. I said, there's the truth. There's the reason. And that's prevalent across the way. This is why we even do infinite banking internally. We actually design these policies internally with Money Ripples because I couldn't find even friends that I could trust to do it the right way, the way that I would do as an investor. You understand, like, that's frustrating. You know, if I tell people all the time, I even tell my own team, I said, if there's any company that does something better than we do, use them. I'd rather just send the business to them and they pay me a marketing or referral fee for that versus doing it ourselves because it's expensive to run your things yourselves. But I brought it in-house because I could never find any insurance agent doing it consistently the best way. So getting back to which whole life policy is best for infinite banking, it's not just whole life. And no, it's not universal life or index universal life. There's people out there selling that crap because they think that's going to work and that's going to blow up. In the next 10 years, I promise you, there'll be so many people ripping on that online, more than they are even today. So whole life policies, what are the best ones? Here's the simple answer. It's the policies that have the least amount of fees coming out of it. The ones that have the least amount of fees coming out are the best policies. Now you might say, okay, cool, that makes sense. What does that look like? Well, here's the thing, like, it's not just based on what you see happen in the first year, but it's throughout the whole policy. What's going to allow your cash value, that tax-free savings account inside, to grow the most over now and in the future? And so we're independently brokered. We use a lot of different companies, right? And I always try to figure out, like, how can you get the most out of each company's policy? How can you squeeze every bit of juice out of them? You know, that's the real key. Now, there's some people that say out there's like the 60-40 split. You'll hear that kind of thing. I've ran those numbers. I've seen those numbers. And every time our clients say, yours is better. Because ours might be closer to like an 80-20 split versus 60-40. That means literally you're overpaying by twice as much on those fees. There's no reason to do that. They'll say, oh, there's a reason. Yeah, the reason is because they want to make more money off of you. That's why, because they're professional insurance agents. That's how they make their money. They're not investors, right? Even if one of them says, hey, I'm an investor, I do real estate investing. Yeah, but you also just care about the commissions coming in as another stream of income for you because your real estate sucks. That's why. I know I just said it. I'm going to get blasted by somebody, but in the meantime, I don't give a crap because my real estate does great. So here's the big thing, guys, is that it's about the fees. Now there's another one. Here's another one you gotta be careful of. There's a 90-10 split. This is specifically with Mass Mutual. Great insurance company. They do great work. It's probably my second favorite insurance company that we use. The only problem is this. Yes, you have 90% of the money going in versus the 10% in costs. This is good. If you're putting in, say, $10,000 a year, that means the first year, $9,000 you've got in there. That's cash that's yours. Only $1,000 comes out in fees. Even with our normal policies, it might be about $2,000 or so that comes out in fees. But here's the problem, and this is even true within Mass Mutual. They have the normal one that would be maybe like 20-25% come out in the first year versus 10%. You would think, oh, well, if 10% comes out, that's better. But it's not, because even when you compare those two Mass Mutual policies, the boring one versus this, they call it high early cash value or HECV, right? The problem is this, by year 5, you have less money in here than over here because they just delay the cost to later years. It looks good up front, but it's not good. It's like when you see something on Temu, right? It's like, oh, this looks great. The color looks great. It's perfect for my house. And then you get it, it's all faded. It looks like crap. And you're like, this is not what I ordered. Send it back. And they take it back because they know they send you crap from China, right? That's what it's like. It's like, yeah, it's good up front, but it doesn't fulfill down the way. It should have more cash now and later so that it works best. So just understand that best design is the one that, again, gives you the lowest cost now, but also in the future. So yes, even their normal one does better over time. And yeah, there's other companies like Penn Mutual that do it better. But I'll tell you, it's not about the company, because I actually just ran into a situation last week where someone said, hey, this is an insurance agent that came to me. He said, look, here's a policy that somebody did with Penn Mutual. I'm not licensed to them. I know you are. Can you tell me about this policy? And this person was putting in $5,000 a month, $60,000 a year they're putting into this policy. After 3 years, putting in $180,000, how much do they have in cash? $30,000 bucks, because in those first 2 years, it was zero. All their money was going to insurance costs. I showed this guy, I said, look, here's what mine would look like doing the same thing. $60,000 first year, $50,000. I said, literally, we are saving her $50,000 in costs that she's paying unnecessarily in this policy. By year 3, she got like $170,000, not $30,000. That means we saved her $140,000 in cost. That's how you know I have the best design policy. But it's not about the company per se. The company has the potential, but it's the agent and how they design it, what they understand, that makes all the difference. Here's the deal. Most agents do not know how to do this. This is why most don't do it. They might do it if they knew, but they just don't, because insurance companies don't teach you how to squeeze all the juice out of their stuff, right? They want to make more money off of you, naturally. At the same time, even if they do know it, the very few percentage that do actually know how to do this, they don't do because that's how they make commissions, and they don't want to cut their commissions back. That's why the best design policy comes based on the agent that's willing to do the best every single time. Even the people I have employed with me that write these policies, I tell them, you've already had your first verbal warning. If I ever find out that you do a policy that's not in their best interest, that they couldn't have been done better, at least if you let them know it could be done better, even if they chose to do differently, if it can be done better and you don't give it to them, you're fired, you're out. That's it. That's just a hard rule that we have. Unfortunately, I haven't found that anywhere else, and that's why I haven't used other companies to do it. So now, if you're interested, like, how do I get the best design policy? How do I know it works best? By the way, what this direct versus non-direct recognition stuff? What is this, all this stuff? Go to moneyripples.com. There's a whole infinite banking section there for you. Check that out. You can even book a call with our agent right now.